All right, so Peter, I was just looking at something I thought was pretty interesting. The first half engagement report from Netflix. You don't see a lot of companies putting this out. So long story short, subscribers are up double digits, but engagement's actually down. What does that tell us about this quarter?
The reporting's tricky. The engagement declines are a function of the paid sharing program that Netflix has been implementing now for about 18 months. What that means is that some of the engagement from last year fades as certain of the former password sharers don't take the invitation to sign up for their own account and get shut down. And so there's some undercounting of engagement in those numbers that makes it noisy.
So it really seems like Netflix has remained the king of streaming and kind of won these content wars. Tell me if I'm right or I'm wrong. So it seems like they have a lot of just tailwinds behind them right now, live events. A lot of people excited actually about that Mike Tyson Paul fight. What are the headwinds for this quarter? What challenges are they facing? Because it doesn't seem very clear that there are many.
Netflix is heavy on optimism and light on controversy at this moment, and
Right.
the stock price reflects it. It trades for about 30 times 2026 free cash flow, and Netflix can rightly claim that they've won the streaming wars. We don't think that streaming video is a winner-take-all business. But Netflix is in a powerful position, the strongest position they've ever been in, relatively speaking, and we see them widening their lead. And so full of optimism, and as far as controversies for the quarter, Netflix is really facing the question of what its subscriber growth will be in 2025. And investors will be looking for signs of that in this report. Remember, paid sharing has been boosting subscriber growth by tens of millions over the last year and a half. That well won't produce water forever. And so the question is, what's the new normal for growth when that slows down? And in that context, it was really interesting that they announced that they would no longer report subscribers in 2025.
Peter, it seemed like you were kind of scratching your head trying to think about a problem there for a minute. I mean, you just like, what could actually be the problem? Last question, then we got to go. WWE, how big of a deal is it? It's not a major sports league. It's not the NBA. It's not the NFL. But WWE long term, what does this mean for this company?
So the structure of the deal that Netflix did with WWE was really telling. Netflix almost bought the rights. By bought, I mean permanently owns. They have a deal that could extend longer than a decade. They have an out halfway through. But it's one of the longest term licensing deals we've ever seen. And we think the reason is because Netflix can have a real impact on the value of WWE. We think that there are people around the world who've not been exposed to it, that Netflix technology for recommending content to people that will probably like it based on their viewing can really drive the value of WWE. And as a result, we think that's why Netflix did such a long-term deal. If they do drive engagement, they can benefit from it. They can make that license quite attractive by driving the engagement. And it's part of their broader strategy of trying to create a live audience that helps them drive advertising inventory, be more relevant for advertisers.